So today we're going to do an update on Sofi Stock. So it's a stock that I own, but it's not really done much in the last couple of months, and I've had a lot of you guys saying, as a shareholder of Sofi, Jacob, are you still actively happy with the stock, and are you buying the stock still, and what's your current thoughts on the Sofi stock and the fact that the stock's really done nothing. So today, for all you guys that were asking about that, hopefully this video gives you a bit of an update, and let's get started and see if Sofi is still a stock that I believe will 2x in the next 4 or 5 years. Let's take a look. So Sofi Stock, ticker symbol SOFI, it's a stock that I've owned for around about a year now. I first posted a video about Sofi and why I'm buying it around about May the 29th, 2023. So it's basically bang on a year since I started buying the stock. I first started buying the stock when it was more in the $5 range. However, I've always said that if you can buy in the $6, that's a really good range to be buying. I think anything below 8 is okay. So yeah, I was happy to be buying this stock in this sort of range, and the fact that we're now a year on and the stock is basically where it was a year ago. It's a little bit higher from a year ago. It's quite surprising to me, and I've actually been actively averaging up on the position. So even though I was started buying this in the $5 range about a year ago, I'm about break even on the position now, and we're about a year into holding this stock, and I've got to say, it's one of those that's quite frustrating actually, and we'll look at this a little bit further in the video, is that it's one of those stocks that has absolutely smashed it financially, and you know, you have 3 or 4 updates where the stock just continues to beat expectations, but yet it's not really done anything. And yesterday was actually talking about YouGov, you know, your stock that brings out that kind of one bad update and then boom, it falls off the cliff and loses 40%. This can be the really frustrating thing with the stock market, is that, you know, you have that stock that brings out that one bad update and it falls off a cliff, yet you can be owning the stock for a year and it brings out 3-4 fantastic updates in that time, and yet the share price hasn't really done anything to kind of reflect it. But we'll get onto that in a little bit. But yeah, as you can see, the share price has been stagnant since it came through a SPAC. It is actually down from where it came through a SPAC still, so it hasn't broken to all-time highs yet. And in fact, year to date, the stock is actually down 34% year to date, which overall, I think the fintech in general is not having a good time at the moment, but it's quite surprising when you actually look at how good the financials have been. Anyway, let's look at Sofi. So Sofi first started off in 2011 as a company which was helping students get more affordable options for taking on the student debt. Since then, the company has expanded to a lot more products and services. So for example, in January 2022, they actually they got their license to be a bank. And if you do go on the website today, you can see all the products they offer, which is a lot of products like personal loans, banking, credit scores, private student loans, student loan refinancing, travel. Basically that one-stop shop for all these kind of financial products. And the whole aim is really to get more of the younger generation who are more wanting to not go into the traditional banks, want to get it all in one place and get the best deals, and that's what Sofi is catering for. They're trying to get you on early into that finance space by going, okay, I need to go get my student loan. Okay, now you start moving up the age bracket, and then you go, okay, I need to get personal loans, maybe I go buy a car, and then you start moving into your mortgage loans, and you go buy a property. So the timeline of what you'd be interacting with Sofi just gets more and more as you get older, which is the great thing about Sofi. I think that you'll see as it takes on its younger client base, they'll start using more and more products, which we have actually started to see in the financials as well, which is fantastic to see. Now, like I said, this stock actually came through a SPAC a few years ago, and unlike many SPACs, a lot of SPACs have failed and dramatically gone wrong. Sofi is anything but that. They are one of the companies that hasn't only matched the financials they set out in 2020, which is the slide that I'm showing you right now. They've actually gone and beaten those financial guidance that they were actually given. So if you go look at what the revenue was for 2023 expected to be, it was going to be 2.1 billion. If you do look at what Sofi have recently delivered on, it was 2.1 billion, well 2.122 billion, so a little bit higher than what was guided for from their actual presentation from a few years ago. If you look at EBITDA, their EBITDA guidance was to do 484 million EBITDA, and you can see EBITDA has come in around 431 million. So they are a company that is actually matching up what they said. And these, if you looked at these targets from 2020, you would expect maybe the share price will be a little bit higher than where it is right now. But yeah, it's not really reflected at all, which is surprising to see. Now, the big thing, like I said, is you look at all the recent earnings and they've been very impressive. They've ramped up to profitability now. The company's still growing at very impressive rates. And then we look at the January quarter, it was a 34% year-over-year growth. And if we go on the most recent quarter, April 29th, beat on the EPS and the revenue growth of 26%, so still growing at very good rates. So the numbers have been very good, and they also hiked up the guidance as well. Another positive that you have with SoFi at the moment as well is the CEO, Antonotto, is heavily buying shares in the company. As you can see here, there's a lot of regular buys as you see going on at the moment. And I think when you look at, if you ever go listen to Antonotto, really good speaker, really good CEO, and the fact that he's giving the confidence and going to buy more shares, I think he's just even more positive as a shareholder of the company. And if you go look at the last presentation, I think it's just more and more clear about the ground that SoFi is taking off all these legacy businesses like the JP Morgans of the world, the Bank of America of the world. Members, look at the member growth, very impressive member growth as you can see here. And if you look at products, once again, what they're doing is they're getting the members on board, and then they're cross-selling the products, and you can see the products that are being added in to the platform as well. If you look at Galileo as well, which is something that I'm not going to go into too much detail today, but is another bonus that the company does have. Even Galileo is doing very well, and something quite unique to the business. And overall, I just see a very disruptive company in the fintech space, which is beating expectations, grown. What you'd want to see is, what do you have to do to have a successful business? You've got to have a company that grows profit and revenue in the right direction, and eventually the share price should be rewarded. And I think when you look at the past performance of SoFi in the last few years, you've got a company that has been growing that revenue. As you can see here, the company has now started to move into the profitability point of view, and hopefully by the end of the year, we have a company that's going to post the first full year of profitability. They're already doing it in the quarters at the moment, but good amounts of profitability that start ramping up, and revenue still ramps up. And I think it will eventually get rewarded on the share price. The only negative I have with SoFi is the shares outstanding. The shares outstanding on the company does increase quite heavily. Although my thinking is that if SoFi does carry on making the profitability that it does do, it's going to have a lot of options to potentially do share buybacks. And if they do share buybacks, maybe that neutralizes the actual shares outstanding a little bit through the stock-based compensation they do offer to for the pay packages for some of the people that work at the company. That I think that'd be really good if they do get there. That's the only negative that I do have the company. But overall, I just see a company that is taking market share, products are expanding, members are expanding. You've got the CEO buying shares. I think there's a lot of things to like here with SoFi. So let's look at some numbers. Does it still have the potential to 2x? Well, when I look at the numbers here, I've gone 12, 15, 20% revenue growth at the moment, and the profit margin of 10, 12, 14%. So it's currently going to probably do around about 10% this year. I think as we see the company scale up, there's not that many costs that the company has to put in place, and we'll start seeing the profit. I mean, they've got 80% gross margins. It's very achievable for them to get to 14%. I would even dare say that in the more mature, by probably the end of the decade, they're going to be even higher than 14%, but I've gone 14% on the high side. I've done a multiple of 20 times earnings. Now, I think a company that does these financials will not be trading at 20 times earnings. I think the company will be valued a lot higher. But even if you look at these numbers, on the low side, which would be very disappointing if they did these numbers, you're still getting 14% upside, on the mid side 51% upside, and the high side 110% upside, which would be that 2x. So I do think even on conservative numbers, SoFi is still showing the potential to be a 2x company here. Now, I think personally that when we have a company growing at 15-20% and the profit margin is somewhere between 12-14%, which I think they'll get to in the next couple of years, I don't think the company, and by the way, sorry, I haven't updated the years down here, and that should start with 2024. I've just not updated them since I last used this sheet here. But I think you're going to be trading at more of a premium. I think that the company here probably be trading more towards, at the moment, I think the company actually trades at 70 forward times earnings. I'm not going to assume a 70 forward times earnings, because that's obviously quite a rich valuation to assume there. So let's just say, for example, it trades at a bit of a premium and it actually trades at 30 times earnings. I think that's fine to say. And you're getting, there's even a lot more room for safety there, which I think would be very achievable. Just to be a little bit silly, obviously this probably won't happen, but let's just say it was to trade at like a 60 times earnings. That's where you do get a really big upside. So the company has potential to become a big multi-bagger. For that to happen, it would need multiple expansion, and people would really need to put SoFi at a premium of 60-70 times earnings, which I won't assume. It's not healthy to assume that it's going to have that multiple expansion, but sometimes that happens. Sometimes you have those stocks that all of a sudden the market turns around and goes, actually, we really, really like this stock, so we're going to put you a really big premium. And if that was to happen, that's where SoFi would come a really big return of of a stock is if it does trade at a premium. But I'm not going to assume it does that, and if I don't assume it does that, I still think I make good money on the stock. I mean, it'd be nice if it does, that big multiple expansion, but I don't think it will. And if I do think that it grows 15 to 20%, which I think is very achievable in the next 5 years, and that profit margin does get to 12 to 14%, which once again I think is very achievable in the company. And I think that if it does those numbers, we'll probably be trading more towards maybe 30 times earnings rather than 20 times earnings. There's definitely even without the assume of 30 times earnings, 20 times earnings, there's definitely the 2x potential there. So when I look at SoFi, yeah, I still think the stock can 2x, and for me, I'm still holding the stock. And if anything, it's a buyer, because at the moment I'm just seeing the stock that has that 2x upside. So while it's in that bracket, I will add to the position in SoFi, and I've said before, in my opinion, anything with SoFi in the $6 range I think is quite attractive. And as long as I keep staring at the financials and I stare at the numbers, and we see the members just keep going up in the right direction, we see the products going up in the right direction, Galileo counts going up, the revenues going up, the profits going up, as long as all this keeps lining up and this moves in the right direction, all the metrics move in the right direction, the share price will reflect that one day, and that stock will start pushing towards that 8. I mean, a 2x would be $12.64. So do I think SoFi can get to $12.64 in the next 5 years? Yeah, I do. So I am actively buying the stock at the moment, and I do like it. So for you guys, I wanted a bit of a recap or an updated thoughts on where currently SoFi is. I hope that was useful for you, and in my opinion, they are doing very well, and I think it will be rewarded if they keep doing what they're doing anyway. So that's where I'm currently at with SoFi. I rate it a buy, and I am actively buying it anyway. So I hope you enjoyed the video on SoFi, guys. If you could hit that like button, and I'll see you in a bit.